Okay, we are going to get started here. Thank you so much for joining this call today about product liability and risk control. This is everyone's like lunch hour for the most part, so we'll make sure that this presentation part is brief, but we'll have a discussion at the end. I'm Bethany Carney, and I will be the host of today's call. If you wouldn't mind placing yourselves on mute if you haven't already, that'd be great. And we'll have, like I said, that discussion portion where you are all welcome to contribute at the end of the call. Once John and Holly share some information with us here. So I'm going to start with the introductions for our presenters today on the call. John Malave is the CEO of QA Canna. QA Canna is a quality assurance and consulting compliance consulting firm, and they've been established to solve complex problems and to help execute critical projects across the cannabis space. Holly DiLorenzo is a business development professional focusing on cannabis, healthcare, and construction industries at the Hardenberg Insurance Group. Holly is the director of their cannabis division. Hardenberg is a New Jersey-based insurance company that's been around for over 60 years. They provide insurance solutions as well as risk management planning. They're one of the industry's top insurance providers, or they work with the industry's top insurance providers, providing cost-effective, tailored service plans to protect your family, your finances, as well as your business. Thanks so much for joining us today, Holly.
Thank you.
You're welcome. So I just wanted to give us the grounding statement here that by law, liability is where a person or a company is held responsible for something. When we talk about liability in cannabis, this could be a product that caused harm to a customer or they just had a bad experience with it and they're holding that company responsible for it who made the product. John, can you walk us through and jump right into this overview of relevant liability aspects that are applicable in cannabis?
Sure. Thank you, Bethany. And thanks everyone for joining. So one of the narratives that we commonly hear within the cannabis space is that cannabis has been around for thousands of years, and essentially that it's a safe plant, and why do we need to have regulations, or why do we need to have these controls, or why do corporations need to be involved in cannabis because it just comes from the earth, et cetera, which is, on its face is definitely true. There's a lot of positive efficacy with cannabis used from medical applications and things like that. That's why it's provided to patients. But the problem is that when you go from something that's just naturally occurring in an organic space and moving into an industry to where you are manufacturing and modifying that plant through various different complex products and things like that, you are inherently introducing risks throughout the whole process, from when you get the plant or growing the plant through modification and manufacturing, through distribution and everything else. So as the cannabis space evolves, it's becoming more and more regulated. There's more professionals that are being involved. There's more companies that are involved in the manufacturing and distribution of the cannabis plant. And then also it's becoming ever more regulated via the regulatory bodies on a domestic and international scene. And right now, as it stands, we've kind of discussed previously, and I think people in the industry know that the regulations just aren't robust enough. They're really not where they're going to be in several years, or even a year or 5 years or 6 years or 7 years. It's going to become more and more stringent, because the fact is these products are going into end users on a recreational basis, but then also going into health compromised individuals as being prescribed through doctors and things like that for treatment or what's the word, for relief from various symptoms of diseases and things like that. So as we become more regulated within this space, as more regulations apply to these companies that are manufacturing and cultivating and distributing, basically the expectation by the general public is that we have a better expectation of quality. Now that there's less room for error, because basically we're saying, okay, we know that these products or these plants are good for health compromised individuals. We have an expectation that they're going to be somewhat safe, that you're not just going to be like big tobacco feeding us garbage and compromising people's health and things like that by lying and doing all these other things, or what some might consider propaganda in that respect. So the expectation is that you're going to be putting out a product, you're going to be entering into an industry where you're going to be looking for profit and to make money. So you're going to have to adhere by these rules and regulations and expectations from end users. So essentially, you're going to be exposed to more product liability. There's going to be risks of potentially, if you do have an adulterated product or some type of defective product that goes out and goes into a patient or an end user and they end up being harmed, there's going to be legal repercussions to be able to pursue some type of compensation or some type of action against the companies that actually were the suppliers of those adulterated products, or some other regulatory process through recalling and things like that. So as you move into this regulated environment, your systems inherently become more complex. You have to manage your supply chain on where you're getting your products from, and then how it's going into your manufacturing, how you're developing your products. Do you have risks in your product development? And then also in a distribution, are you distributing it in a manner that's going to be controlled, that if you do need to recall it at some time for some problem that you might identify or that somebody on the outside identifies, are you going to be able to make sure that you get all of your product out of the market so you don't inflict potential harm on anybody else, any other end user? So really, as the expectations, as the regulations increase, expectations increase from the end users, and there's expectation of higher quality, which means less room for error. And really, this is the overview of kind of how product liability within this space is kind of coming to fruition and really being or starting to be considered by individuals, as we can see, as Holly, our guest from an insurance company, where 3 or 4 years ago, insurance wasn't even really playing a part too much within this space. They're now getting into the space because they understand that that these companies are going to have to start identifying these risks and potentially need policies to ensure that there's coverage for certain things that happen in normal manufacturing and things like that.
Thanks, John. That was a great overview of the implications to the cannabis company space. I wanted to jump now and make sure Holly had a chance to introduce some of that liability coverage that's available to those customers. Holly, can you give us an overview of what's typical of a policy?
Yes, absolutely. Sorry, my phone was on mute. Thank you. And I just wanted to piggyback on what John said, that more and more carriers are coming on and offering products liability coverage to the cannabis space. There are still a lot of concerns because this is a newer industry and we don't have precedent set, or even, we're expecting that there's going to be a lot of lawsuits coming out of this industry as the industry grows, but right now we're kind of limited with that. But one of the things I wanted to go over is, why do you need products liability coverage? And it varies. The requirements vary from state to state on whether a cannabis company has to cover it. Does it have to be a standalone coverage, or does can the GL, the general liability policy, pick up on some of this? So different states have different requirements, but you need products liability coverage if you sell any goods or products that end up in the hands of the public. You need as much insurance coverage as you can afford, and products liability coverage is not a substitute for producing a safe quality product. And one of the general rules of thumb is you would need to reassess your insurance coverage at least annually. As your company grows, your exposure grows. So you want to make sure that you're covered properly. So what does a products liability policy cover? First is lawsuits from illness and side effects, product malfunction and defects. There was a case, Livewell. It was in Colorado in 2015. The company was called Livewell. Livewell used Eagle 20, which is a pesticide, and it produces hydrogen cyanide gas when burned. Two medical patients found out that this company was using Eagle 20, and they brought suit. The case was dismissed because there was no actual evidence of injury, but the consumers want to know what was in the suit was brought up because the consumers wanted to know what was in the cannabis that they were smoking. And since Livewell did not, they since have stopped using the pesticide, but since they didn't disclose that, that was the original thing for the case. Now, this would be covered under a products liability policy. However, when you're dealing with an underwriter, they're going to ask a lot of questions as to which pesticides are being used. There's going to be a lot of research. So it could be covered, but an underwriter could say, no, you can't use that type of pesticide if you want the coverage. Another thing it covers from is third-party claims for actions that are occurring during consumption. Another case, Guy's Garden, was the estate of Richard Kirk versus Guy's Garden. So Richard Kirk ate an entire bag of their Karma candy, which contained 101 milligrams of THC. And the family claims that it caused Richard to have hallucinations, and he shot and killed his wife. That case is still pending. And out of that case came stricter packaging and labeling requirements. And so that, like I said, is still pending. And then it also protects against product recall and withdrawal coverage. An example of this is there was a thriving cultivator purchased additional cannabis from a wholesaler grower to meet the 5,000 pounds he was short. Customer complained of a strong sulfur taste, and soon it was discovered the wholesaler applied the wrong pesticide concentration, and the cultivator had to pull the contaminated cannabis products from the shelves, and it cost the company $3.5 million. Now, one of the things that could have protected this cultivator is they could fill in the coverage gaps with contractual indemnity and additional insured requirements. So had that cultivator had a contract with the wholesaler where they indemnified him, then that wholesaler's insurance policy would have had to answer to this. I believe this claim actually was covered as well. All right.
Thanks, Holly. That is scary. Was that your last? I don't want to cut you off.
Yep. Nope. That was it.
Okay. It's very interesting, and I would not want to ingest cyanide, so I would be very cautious about that. And I'm sure that's a one-off case, of course. But so I guess next maybe we can talk about some of those biggest concerns. So from the insurance company perspective, what are they most concerned with when they look at a cannabis company as a client?
Okay, so since this is like a new industry, a lot of these carriers are really leery about. We don't have any national carriers that are actually writing cannabis coverage. All of the coverage is found in the excess and surplus lines, but there are a lot of concerns, and the majority of the concerns are around edibles. One of them being the consumers often don't realize that cannabis may take significantly longer to affect them if eaten, and consequently, many consumers eat too much of it, causing adverse effects.
There's someone that needs to go on mute. Sorry. Michael or Zach, I guess. Sorry, continue.
Oh, sure, no problem. So that's a big concern for underwriters is the labeling on the package. So in that claims case where the guy ingested an entire bag of candy, they are looking at the labels and the warnings that you're putting on, that are being put on, and what is the serving size, and is it a reasonable serving size? Like if you're manufacturing a cookie, does that cookie have 50, 60 milligrams of THC in it? But knowing that the consumer will see a cookie and will eat an entire cookie. And so they look like, an underwriter really looks at labeling requirements with the edibles. And also, this kind of goes into it too, misrepresentations and others' failures to warn, claims, consumer complaints, and alleged deceptive practices. Again, that goes back to labeling requirements. Breach of warranty claims, defective manufacturing additives to the vape cartridges. John, I know you wanted to speak to this a little bit.
I'm sorry, I just had to take myself off mute. Yeah, I think, there's an actual class action lawsuit that's going on, and I don't want to get too much in depth about this because our next forum is actually going to be product liability related to the legal implications of it, and we'll have an attorney as a guest to discuss that. But I think this kind of points to the complexity of all of these issues here when manufacturers and people in this space, whether they're distributors or whether they're manufacturers or whether they're manufacturers of devices like, vape cartridges and things like that are coming from overseas, they're all potentially at risk because there is no precedent set right now. A lot of these things are being hashed out in the court of law, whether on a state level, and then eventually once we get probably federal legalization, it'll be on a federal level, which is probably opens up other legal opportunities, which I don't want to speak to because it's outside of the scope of my expertise. But there's currently a class action lawsuit that's going on in Washington State right now, where there's 5 manufacturers that are being sued under the same class action lawsuit, along with a cartridge manufacturer from China, and then also with a distributor of the actual product who doesn't even manufacture. The producer of the vape cartridge, they feel like it's in China, so they're out of reach, but that's not exactly true. But they're not really pursuing anything with them. But the manufacturers and the distributors are being sued because of the fact is they're responsible for these for this product liability aspect. This gentleman was vaporizing and suffered pulmonary problems that seem to be permanent. So this kind of ties into the whole vaping crisis. But I really just wanted to talk about how complex it is and how companies really need to be aware that just because you have a policy doesn't mean that you're going to be covered sufficiently enough, because even if you get through litigation, even if you do remove yourself from any type of culpability, you're still going to have a PR nightmare, and you're going to have to pay all that money to kind of repair your image and things like that.
Right. And some of that could be covered through a product's liability. There is a line of coverage for PR. Mm-hmm. Just noting that. But underwriters are also concerned about contamination by mold, fungus, and other materials. Reducing the exposure calls for continued monitoring of business exposures related to cultivation, production, and distribution practices. All plant material must be tested for pesticides before used in production of a cannabis product. Infused products must have proper testing and controls in place to ensure that consumers receive the precise amount of THC or other cannabinoids in each measured amount. All products should be third-party tested to certify that their products contain no residual butane, propane, or other solvents. And this is particularly important for consumers whose health may be compromised and are using cannabis for medical purposes. So that's what underwriters are looking at. That's what's making them nervous. And then there are, like I said, some ways to kind of ease an underwriter's mind when you're looking to go get product liability coverage.
Thanks, Holly. And that makes perfect sense from the QA perspective. This is always something that these are at the highest part of our list as well. And there are also some of those gaps where not all states necessarily have that capability in their labs to test all these things. So Those
Mhm.
concerns are very valid. Um, so although it's great to talk about what the coverage is and what it focuses on, um, what I think we need to look for too is those gaps in coverage, to really understand where those liability risks that we've identified
Mhm.
are are not going to be covered.
Right. Okay, so some of the gaps in coverage. Now, let me go back to so in each state has to regulate. Each state has certain regulations set in the licensing of cannabis companies when it comes to products liability. Some states require you to carry a 2 million aggregate and a million per incident in products liability. But then some states they have a loose definition and they say, okay, your products can be covered under your general liability. But within general liability coverage, there is a lot of exclusions. The first one is the policy excludes everything within the product's completed operations hazard. Products completed operations hazards, which means that there is an injury arising out of an insured product, are likely to be excluded. This is due to the broad definition of the hazard. So when we're as a broker, when we're reading through these policies, what we're trying to do is get this language put back in because at the completed operation, somebody eats one of your edibles and gets sick, we would want that to be covered under products liability. The cannabis health hazard endorsement, excluding claims arising out of respiratory disease and many other problems, excluding claims seeking costs for medical services arising out of policyholders' product. This goes back to the vaping crisis, and there are carriers that obviously don't want to cover that, but like I said, we're trying to, when we're reviewing these product liability policies, we're trying to get that language put back in. Now, let me just be clear. Obviously, the more that we're putting back into the policy, the more coverage, the more the premium's going to be, but it's also going to be better coverage. Claims arising out of ingredients or additives such as caffeine or nicotine. This is really true with the edibles products. So if you have chocolate, chocolate tends to have caffeine in it. Now, originally, that is being endorsed off of the policy. So if there was a chocolate bar claim because there's caffeine in that, then they wouldn't want to cover it. But we get that language written back in so that they do cover it. One of the most important part is most product liability policies are written on a claims made basis, meaning the claims have to be reported within the policy period. So this potentially could exclude claims arising out of mold or fungus, claims arising from additives to cannabis products, cannabis health hazard claims, violation of law, or governmental investigations or enforcement. So let me explain this a little bit. So a claims made policy, if my policy runs from March to March, and I have a claim on April 1st, and that claim is reported on May 1st. That claim would be covered under this policy because it was reported during the policy period. However, if my policy runs from March to March, I had a claim in February, but it wasn't reported until the following April. It falls out of the policy period, and therefore it would not be a covered claim. So what they're doing now is the industry is starting to write on an occurrence basis. So you're going to see it's really starting really this year, because a lot of these claims aren't being covered because of that language of the claims made basis. So you'll see a lot of policies now coming out on an occurrence basis, which means okay, there's a claim, and it's covered when the claim occurred, not necessarily when it was reported, if it was reported in the policy period. It's a little bit confusing, but that's a big one. So when, as a broker, what we're looking for is occurrence-based policies to offer our insureds. And finally, non-regulated business involved with cannabis risks, such as equipment suppliers and commercial landlords, will underwrite, the carrier will underwrite out the cannabis portion, causing the business to not report cannabis involvement. Claims could be denied based on the exposure not being reported. So if I am a landlord and I am renting my warehouse to a cannabis company and I do not disclose that to, if I do not disclose that to the underwriter and there is a claim, that claim wouldn't be covered because I didn't disclose that to the underwriter that I was working with a cannabis company. So we're trying to find ways to that when we're going out and getting these policies that we're working with the carriers that will cover cannabis so that there isn't the need to non-disclose some of that information.
Thanks, Holly. That's a little bit scary, but it's good to know upfront. Let me not jump ahead here. So I'm going to jump back to John a little bit here. So this is the list of requirements that was provided to us from underwriters. This is an aggregate of that list. John, can you walk us through the list here and how we would expect to address in our quality system to meet these insurer expectations?
Sure. So I think as we can see, anybody that's from a regulated environment and familiar with quality would see that a lot of these expectations correlate with things that we do in quality or expect anyway, because they come from regulated industry. Now, there isn't many data points here that they utilize, which is part of the reason of why we at QA are working with insurance companies and helping them develop risk management programs to better identify the data points that are really critical within manufacturing and supply chain and things like that, that can basically help companies get, better policies, better coverage, cheaper policies, et cetera, stuff like that. So as we see here, we'll just kind of go through point here. Use of third-party testing of products to certify quality, free from mold, pesticide, or other contaminants. These correlate with what the state regulations are. So the insurance companies, not really knowing the industry, have just said, okay, these are the state regulations. These are the data points that we're going to use. And this is essentially a practice that we utilize in pharmaceutical or medical devices or even dietary supplements in that respect. Use of packaging that discourages tampering, unauthorized use, and preserves freshness. Again, these are all basic elements that we utilize in other industries, because you have to ensure that a product is going to stay at the level that's expected of efficacy, as it sits on the shelf, waiting for consumers or whatever to buy that in that respect. And then, I thought that was my screen. Sorry. The product labeling contents, again, depending on the industry, dictates on how much information needs to be on a label. Whether if it's food, you have to have a certain level of information, and if it's pharmaceuticals, you have to have an even more robust level of ingredients and dissemination and directions and things like that. A use of a product tracking system. In cannabis, they use what's called a seed to sale, which closely correlates to what the DEA would utilize in controlled substances and pharmaceuticals, to basically identify a product or amount of product that comes in and that you have from the beginning of your processes all the way through the supply chain and distribute it out. Even though that system in cannabis is not really robust as it should be or will need to be, it's what they currently mandate within the states right now. And then this other one, does the insured have an effective recall process, including patient notifications, products capture and testing, sample retrieval and testing? Again, those are all practices that we utilize in other regulated industries, essentially, and is dictated by a quality management system, to ensuring that we are able to, if anything's identified out in the market by a customer, by some other entity, and there's potential adverse effects to the end users or the patients, that they have the ability to be able to recall all the materials that are out in the market without potentially exposing anybody else to any type of risk. So that's a pretty integral and important aspect of this industry, and moving forward will just be just as robust. And keeping small samples of batch for 90 days to test in case of issues requiring a controlled sample. My guess is that time frame is going to increase. It's pretty short for now, but that's what a lot of the states are requiring, essentially, to ensure if something were to happen out in the market and somebody has an adverse effect, they have at least samples to test from those batches that are still within a controlled environment, and they can try to identify whether the product was adulterated in the facility or whether it actually occurred outside of the manufacturing facility somewhere down the supply chain. And then the last two are two requirements that we're not exactly sure why they require for one of them. Does the insured have digital microscopes to photo ID each batch? We're hypothesizing because we haven't gotten clarity on exactly what that's required for. Maybe some type of serialization through some type of identification marker within the plants or the product itself. I'm not exactly sure, but we don't know why it needs to be microscope or microscopic level. And does the insured require vendors to show proof of liability insurance and obtain certificates? So that's basically to do business domestically. That's a pretty standard thing that you have to have. So it's just basically just supplying proof of that. But how this applies to international suppliers of, say vape cartridges or other componentry and stuff like that, we're not exactly sure, but this is what the insurance companies require. So in general, a lot of these, or almost all of these criteria are utilized in other industries, and moving forward, this criteria list is probably just going to become just increasingly larger.
Thanks, John. We're going to jump now to talk more about like mitigation practices of those risks that you've identified. If you could lead us on that and continue here with the discussion.
Sure. So now that we know that we're operating in a regulated industry, how do we go about mitigating those risks and potential liability exposure? And one of the most critical things, which is pretty much deficient within this space right now, is really understanding product development, understanding what your product is. So it's not just about just having a plant, it's about when you're going through the manufacturing process and you're creating gummies, or you're creating edibles in some manner or something like that, or even if you're using some type of what we would call a combination device, where you have some type of pen or something that comes preloaded with an active ingredient, cannabis in some manner. It's really understanding where the risks lie in the manufacturing of those devices and products, and then how can we, once we identify it, how can we go about best mitigating it as much as possible, so we're not taking on a lot of risk and potentially putting that risk out to the end user. So that's really where assessment of gaps with the knowledge of the highest liability risks. That's really what we do in other industries, is identify where the real critical risks are and mitigate them as much as possible. And then basically just make internal decisions of whether we can assume that risk moving forward, and how that plays a part into, even with insurance companies, and getting coverage and kind of showing them that, these are the actions we've done to mitigate risks within our product development or manufacturing. One thing that we always tell people in this industry, because quality really does lag behind because we don't have the regulatory structure, is we tell manufacturers and suppliers to go above and beyond, because the fact is that the regulations don't mandate a lot. And when you're not doing the things that you need to do, best practices that are from other industries and known, you just have an increased exposure risk, exponential exposure to risk, because you're not really doing things like product development and identifying those risks in there, or even understanding your processes of your manufacturing and identifying risks within the manufacturing process, or the supply chain and where you're getting your material from, and your supplier qualification process. These are all ways that you want to go above and beyond what's expected currently in the industry, because if you don't, you really expose your company to these potential lawsuits moving down the road. And you might think that you're saying, okay, well, I followed all the rules. I did everything that was required of our organization within our state, but that doesn't mean you're not going to be legally culpable for somebody's adverse event or something like that, somebody being hurt, which can destroy your company, even though you're operating within the boundaries of the rules within that state or wherever it would be at. And then basically establishing a program to initiate reduction of risks and greatest liability concerns. This really comes down to what the core of what we do at QA Canada is establish quality management systems. This is why in other, whether it's food or whether it's medical devices or whether it's aerospace, this is why they're mandated to have quality management systems within their operations, because all of the practices that we utilize within and principles that we utilize within quality basically go about helping identify these risks, helping to mitigate these risks, control your processes, and then basically dissemination of all this information up to the highest levels of your organization, so everybody's aware of all these things, and you can continuously improve upon your practices and ensure that you're putting out a safe and effective product to the public and to your end users.
Thanks, Sean. And just to start wrapping this up and bringing it home for some of the listeners on the call, I wanted you to talk through some of these actionable steps to continue on that, taking the requirements and going above and beyond within their means, of course, but some of these actionable steps that we've issued here as recommendations.
Sure. So the first one is maintain a systematic process to manage complaints, returns, reported safety issues before escalation or recall status. So basically, we want to listen to our customers for problems, because a lot of times out in the field, they're going to be the first ones to identify them. And if you don't listen to them, then something might really, an event might occur that's going to be, larger and larger. And then before you know it, you're going to have a real issue. So if you listen to your customers, you can usually get critical feedback and kind of prevent issues from escalating even further. Understanding product risk factors, like we just discussed before about product development. You want to use proper tools for risk management and identifying your product development and your process developments. Establishing quality systems and principles, as you said, basically being proactive and taking a quality approach. Establish supply chain control, hold vendors to higher standards, even though they might not be required to do that. We as product owners, or the organization as product owners, should expect that. And if you need to, then try to identify other vendors that will work with you and are looking to actually create higher standards of expectations in their supply. Internal and third-party evaluations, inspection, qualification of incoming goods. Basically, like what we do at QA Canada, doing audits, internal audits and stuff like that, to evaluate and identify where you're having problems within your organization, and basically making upper management aware of that and implementing the proper reactive and proactive approaches that need to be done to mitigate that. And then maintain internal review and continuous improvement program, which essentially is, like we we're just talking about, in that continuous cycle, making sure that everybody within the organization is aware of the faults and the issues that are occurring within the organization, and all the remediation actions that are occurring to mitigate it or eliminate those potential risks. I don't want to get too much into the GMP aspect of it, because then we will start going down a rabbit hole and stuff like that. But I think for the purposes of this discussion, that's pretty adequate.
Yeah, and I think that's great. And keeping that focus on your customers and how they're using the product at the end of the day, and making sure they're getting that expected product, is really at the forefront of our thought. And of course, related to liability. So thank you, John and Holly. And this information was very useful. And I wanted to continue the discussion, or we will continue this discussion in a part 2 with the legal implications, bringing in Adam Dolan, a lawyer in the field. And I wanted to continue this discussion more about the insurance side and preparing for the risk mitigation with the folks on the call for the last few minutes in the discussion. So I wanted to open it up to any questions that you might have. So please bring yourself off of mute and engage in this discussion if you have any questions.
Yeah, hey, Ferris here from Sparta. I'm a success manager. Great job, guys. Really, really appreciate this information. I was just thinking from more on the implementation and configuration end, when they do use an actual QMS system to support this, is there something they should be particularly aware of when considering and factoring in insurance and these sorts of kind of ramifications that we discussed here? Is there any kind of key points that we could pass on and be sure that we're covering our bases when we work within this industry? As we've recently just seen a kind of renaissance in the medical marijuana industry for QMS, but just wanted to cover off our bases and glean from your expertise. Thank you.
Sure. So Holly, let me answer this, and then you can piggyback from the insurance perspective. So did you say that was that a question, or was it his name Ferris? I'm sorry.
Yes, Ferris.
Oh,
yeah.
Ferris. Sorry about that.
Hey.
So Ferris, thanks for the question. I think the thing is, and this is why we're working with insurance companies, is because a lot of these carriers don't really know all the value, because they don't really understand where the risk data points really are. So one of the things that we've kind of brought to the forefront when we're basically talking to insurance companies, we're saying, if you're identifying risk, which is obviously what insurance companies work on, they don't have any collateral or anything like that. If you're only using seven data points to assess your risk, but we can provide 30 data points of assessment and identify them by practical experience from other industries and knowing where there's potential risk, then that's a value to them. And that's really what they're looking for. It's kind of like there is no set standard, and each carrier, from what and Holly can talk about this more, each carrier has their own internal assessment process, which doesn't seem to be statistically driven, because there is no precedent set. The historical concept here is just not in play long enough to really gather that type of data in that respect. So what we've done is we're helping develop risk management programs that are using our experience from other industries and saying, okay, well, we know there's potential risk here in this part of the manufacturing process or in this part of the procurement process, because we see this in various other industries. And this is really what you should be looking at. And then they can choose internally to say, okay, you're giving us a greater clarity here, so we can adjust our policy based on the data points that you're providing. But as far as I know right now, and I think Holly can attest to this,
yeah,
there really is nothing else outside of the points that we kind of identified, the 7 data points, and they're really just based on what the state regulations are.
Correct. That's it. That's exactly it. The underwriters, the carriers that are looking at this are just basing it off of the state regulations, and they're not. And as John was saying, we're taking it a step further, and bringing this information to them so that they're limiting their exposure because they're covering the risk, but then it's also ensuring that safer products are hitting the market, so we don't have these big claims. But they're learning at the pace that they're learning as the information is coming available, as the claims examples are coming available. They're making adjustments to their risk management requirements, to their underwriting requirements. But right now we have 7 data points, and we're trying to help them expand that.
Tremendous. No, thank you. That really helps clarify from a benchmarking perspective and putting it into context. So it sounds like the risk management module is something that's really key and probably a little bit more pronounced here. So that's really helpful. Thank you, guys.
And to also point, just to briefly follow up on that, Ferris, this is why we tell companies, not only should you go above and beyond in implementing these quality practices, the QMS, because eventually it's going to be required by regulatory bodies, but really you're giving better insight for the insurance writers, and the more data points you give them, the likelihood is that they're going to give you a better policy, whether it's more coverage or whether it's going to be less premiums, whatever it would be. You're able to argue in that respect and say, listen, we're above and beyond this. These are the controls that we have that give transparency and visibility, and that correlate to other industries in some respects. So, we should be able to get a lower cost in our premium or whatever it would be. So that's why we really push for these companies to really go above and beyond, because it's really imperative from a safety and efficacy perspective, but also it's best business. It's just good business practices.
Yeah, great point, John. This is Jack Palace. You're spot on with going above and beyond, because having experienced other evolving insurance markets and other fields, you need to go above and beyond what the insurance carriers are currently asking for, because they're still learning. So that's a great point. This is probably more of a question for Holly. Really, if you could speak a little bit about the capacity, and I guess if we could do this across some different product lines, perhaps like rec use, medical cannabis use, and maybe just like CBD type products. Mm-hmm. What kind of capacity is available, and does that also vary, like if you're a frontline retailer versus a distributor versus a processor?
Yeah. So right now we have a products liability policy that covers everybody. it's not sectioned out. So if I go to, say, a carrier like Admiral, and I say I need a products liability, and I describe the risk, and it's a dispensary, they're going to offer me the same limits that a manufacturer would get. So basic, it is 1 million per occurrence and a 2 million aggregate. And states like Washington and California, they are only requiring that. Now, there are, like for a manufacturing operation, I've seen products liabilities policies go up to, let me think, it was 3 million aggregate, and then I saw one that's 3 million per occurrence and 9 million aggregate, so you could have 3 million claims within a year. But they are very limited and they're very expensive. And also, one thing that we don't have right now is different deductibles. So there's a standard deductible of $1,000, and then usually within a different industry, you would have 1,000, 5,000, and 10,000. Right now, we're not seeing those product liabilities policies come out with different deductibles. Therefore, lowering the higher the deductible, the insured's taking on more of the risk. So you would think the premium would go down. They're not being offered just yet. But as far as how much the insurance carriers can rate, there are insurance carriers that, like, I'll give the example, Admiral again. They rate, I believe their total premium is is over 100 million that they rate for just the products liability line. They have insureds up to 100 million.
Wow.
That's how
Okay,
much they carry.
Yeah, great. So it sounds like, and my observation, it sounds like you're confirming it. It's getting more challenging to get the kind of product liability insurance a company really would want. I mean, $1 million in coverage really isn't going to go
That's
far.
nothing. Exactly.
Yeah.
So how we're getting.
So I think a couple of years ago, it was actually easier, and I think it's gotten tougher
Right.
because as they get more claim experience, they're learning to underwrite this better.
Exactly. But how we're getting around it is, like John's saying, we're being proactive, and we're really we're coming to the underwriter and saying, this is everything that you should be looking to, and this is everything that this company has already addressed.
Exactly.
So it's really, the proactive approach and a real strong risk management plan that we're presenting to the underwriters, that we're actually getting better coverages and less expensive premiums. We're still working on the deductible, though.
Right. Yeah. It's going above and beyond, like John was saying before.
Yeah,
so.
Yeah.
Great. All right, thanks a lot.
Mm-hmm.
Are there any other questions? Maybe one last question? Okay, well, we will leave it with that. Thank you again for joining us. Please find QA Canna and the Hardenberg Group on LinkedIn and follow us for future webinars. We'll meet back here in about a month to talk about the legal implications part of liability. Thank you again so much.
Bethany?
Yeah.
I just wanted to also state that we will also be putting, we're going to have an events page on our website to identify where we have speaking engagements at. And then also where people can access podcasts of our forum discussions, so that they want to review it at home. Okay.
Yes. Thanks so much,
everyone.
Have a great day.
Thank you.
Take care.
Thank you.
Bye.
Thanks. Great job.